Good afternoon, August 11th, 2015. Time to wrap up today's trading. We start out in the E-mini this morning wanting to be short, basically 90 to 95 and be long 75 to 80. We like the short side of the market first. We thought the first trade that would set up would be a short. And the first time out right here would have been the first short that came up. We had a retest failure here. We took this trade in the room. That was a loser. We took this trade in the room. This was a winner. We took this trade in the room, and that was a loser. So we were right 1 out of 3 times, and we said on each one of these long trades that these are counter trend trades. They don't have much going for them except for a technical setup. So I think what we were able to get out of the this morning's trades was that you can trade against the trend, but more often than not you're likely to be wrong. The easier trades come trading with the trend. And you had one right here that would have produced a small winner. This retest failure would have been a small winner. This one, you pretty well knocked the ball out of the park. So the news was bad starting out this morning with China's revaluation. That's not good for our exports. That will work its way into our economy over time. The dollar is strong once again. Again, the idea is if you trade with a trend, look at the big picture stuff and stay on that side of the market, you can prosper. Now I want to show you the 10-minute and the 15-minute chart that we talked about this morning. And it'll be covered on the 10-minute. The 15 will look just the same. The trade right here for the day session open, you were never challenged on that. This trade right here on a retest failure, you were never challenged on that. This trade, if you'd gotten short right here, you had 40 minutes or so to scratch that trade from the short side. So you had a lot of time, but you can see on the buy side right here, high or low if you're buying a breakout right here, and that's not the recommended trade, by the way. Didn't have long to stay with that trade. On this one you had 2 bars to make up your mind, but you can look to the short side. The trades just happen quickly. So the 10-minute chart or the 15-minute chart, whichever one's your preference, can really make a significant difference in your bottom line. It keeps you on the right side of the market, and you're trading for 7 to 10 points when you're working the 10 and 15-minute chart. You're not trading for 2 to 3 like you are on the 3-minute charts. So just keep that in mind. So what do we have looking at for tomorrow's action? We've got news, Atlanta business inflation expectation, jolts, and crude inventories. And the Atlanta jolts will probably be the market's focus. I think they'll be looking to see what happens in China overnight. Okay, we have an outside day. We have sellers off the opening. We got stops below yesterday's lows and stops above yesterday's highs in the overnight session. And here we sit on a weak close. And again, so this market has trading range written all over it. We're still there. Bad news takes you to the bottom. Everything looks pretty bleak. Market doesn't break. Good news takes you to the top. Everything looks pretty rosy. Market does not extend the range to the upside. So we're in a trading range right now. In Globex, I think the first trade is a short. Then if we don't take out today's day session lows, we'll just assume that we're still in a trading range. Looking at the F2 screen, multiple distributions lower. You can see that we got a pretty clean break in the 80 area. So first sell will be in the 79.81. Let them get stops above this high. Sell 1. And then 84.86 for sell 2. News really isn't much of a factor. I think the Chinese news will play. 70.72 is the first place for Globex where support's going to be. So buy 1. And then our 65.67 for buy 2. And we'll adjust these for Globex. After Globex, we've seen what the 9 session looks like. Okay, looking at the note, pretty strong day. Tomorrow's a 10-day auction. Now remember, market's up on the short term, down on the intermediate term, sideways to higher on the long term. So we've got the 10-year auction tomorrow, and today's auction was higher. So I think the easiest trade to see is failure to take out and hold 128 in the overnight session. I think we'll probably get that. This screen says we're buyers. And that's proven to be if equities sell overnight, that'll be reinforced. Definitely a P. Don't have a lot of rejection up here. We just have one tail. That does not count as rejection. That's not a tail. One tick. So selling failure to take out the 28.04 area. I think is the easiest trade to see. I could sell 7s to 11. Let them go a little bit higher, unless the stock market is just totally falling out of bed. Let them get stops above this. Trade a little bit higher and find sellers in London. On the breakout side, we have the breakout from 27.18 to 20. We have a pretty solid ledge right here at 26.5. I think we're going to go lower, so we'll make this 2024 buy one, and it may take it. Right now we're at 26. A lot of it just depends on what goes on with the E-mini, and then 13 to 17 for buy two. Okay, the knob spread widened, and today, don't be surprised if we come in the morning and it narrows. The play for an auction week is always to get long the knob spread. It's not 100% guaranteed, but it's pretty hard for it to go down, because if it does, nobody's gonna. That's against the fundamentals, and nobody wants to buy the paper. So we're going to sell failure to take out 59.04, 59.08. Now we're going to go 15 to 19, let them go a little bit higher. On the buy side, 25 to 21. And we're a little more aggressive. It might be a 17 to 20. It just depends on what the knob spread's going to do. Then 9 to 13 for buy two. We've been looking at, for the September options, the calls for the 30 years have been 160, and that's when we were trading back below 155. And the puts have been at 150, and here we are knocking on the door of 160. And you sit and say, God, there's no way it can get up to 160 based on what's going on. Lo and behold, here we are. These markets can move, and you can't be complacent when you trade them. You can lose money a hell of a lot faster than you can make it. So you really have to be cognizant and stay on top of risk. It may take you 5 or 6 months to overcome a catastrophic loss, assuming you still have capital in your account and the will to trade. It's nothing to be taken lightly. Easy to lose big money, easy to make little money. Hard to make big money. I mean, it's just the way the markets work. Higher low, high in gold. We talked about the F2 today. It looks like it was coming to balance in the 07 area. Looking for a new move out of 07, and there's that. Isn't that a beautiful profile? I mean, that's just about as symmetrical as they come. And you should print this as an example of what a non-Gaussian, I mean what a Gaussian distribution looks like in the futures market. You don't see it often. So resistance is 10 to 12, sell 10 to 12, sell 1. Sell 15 to 17, sell 2. On the buy side, we had a 3 to 5, that's where support is. That turned out okay, not the world's biggest trade. And then 01 to 99 for buy 2. Pretty much where we were this morning. And I think the next play on currencies is going to come from India, from Thailand, from Russia. I don't think Japan can do anything. They've got a pretty big market. We'll see what the EU does, how they try to talk this down a little bit, because the EU has the most to lose from what China's done. I mean, the dollar has been strong the last year. It's appreciated like 15%. And that we've lost a lot of our export market. The stuff that was based on price. Okay, crude oil. It is pointed lower, stops below 42.50 is where I think we are. A lot of times we have one big day and then we get a pause before it starts out again. Tomorrow is the EIA inventory levels. They'll be looking for a draw in crude. We'll see if we get it. And pretty strong market. So short covering, and I mean, take your spot. 44.44, 44 and a quarter, 43.75, 43.50, 40 to 50. So this 43.50 to 75, allow them to get stops above M, maybe a little short covering overnight. Sell one. And then get through 75, we're going to head to 44, 44, 44 and a quarter, sell two. Pick up where we were before the day session open. On the buy side, 50 to 75, should get some short covering against 50. And then we're headed lower, so 41.75, 42 for buy two. I think we're headed to $40 when we take out 42.50. And last but not least, the euro. I think we probably need something from the European Central Banks. Get a little bit of jawboning, a little bit of rhetoric to see if they can talk the euro down. And then if they can't do that, my guess is they'll step up some quantitative, another bit of quantitative easing, something like that. Maybe based on Greece, the bailout's 86, so they could probably be a little bit more generous in the buy down of Greek debt. I don't know what it is, but I think it takes something. F1 says higher prices tomorrow. F2, we've got a split distribution, so I'll put them back together. Pretty square. So we got a seller. Kind of where we had it today, 75, sell one, sell two. On the buy side, 110 even, and then 975, and we'll let it go at that. Okay, that's all I have for today. Got a lot that I need to get done now. Got behind intraday and my follow-up stuff. I will see you bright and early in the morning. They're already revising our temps up. We were supposed to be in the mid-80s today. They're calling for 90, 92 this afternoon. It is still summer, and we've got humidity to match. So a couple of months from now, we'll probably miss these temperatures. But for right now, I could do with a little less humidity. All that latent energy in the air makes it seem hotter than the thermostat says that it is. I'm out of here. Y'all have a great evening.